The world's second largest economy is expected to unveil its new rulers this week. China's Communist Party Congress wraps up tomorrow in Beijing as the country makes its once-in-a-decade change in leadership. We spoke with Mark Mobius, executive chairman of Templeton Emerging Markets Group, about what the changes mean for U.S. investors.
They are focused on this new 5-year plan, which is turning this battleship around towards a consumer economy.
So instead of being externally focused, trading and selling Chinese goods to the world, looking inward, trying to develop and stoke domestic consumption.
Exactly. The total amount of exports and imports, by the way, is going up. 10, 15 years ago, China represented about 2% of the world imports. Now it's over 9%. So they are importing a lot more, and of course exports are expanding. But at the end of the day, this new leadership has the job of turning this huge ship towards a consumer society so that they're less dependent upon exports and they grow.
It's going to mean worker rights, labor issues, rising wages in an era with ultra-low interest rates worldwide. Does that mean inflation?
At the end of the day, it will, unless they can increase productivity, which they're working on. If you look at the makeup of China's exports, you're going to see more and more high-tech goods. I mean, you have a company like Huawei, which is trying to get into the telecoms business here in the U.S. This is a high-tech company competing with Ericsson and all the other major telecoms leaders around the world.
How does the leadership change in China impact the economic relationship that China has with the United States and the bilateral relationship that the two need with one another?
This is very, very critical now because with the problems they're having in South China Sea, the disputes with Japan about the islands off the coast, the U.S. relationship is going to be very critical, and the attitude of the new leadership in this regard is going to be critical. The good news is that this leadership is very modern. They're young. They seem to be quite flexible. At the same time, with Obama having won, you have a more flexible foreign policy. So the prognosis so far looks positive because you have these two leadership groups who more or less are willing to accommodate, negotiate, and so forth and so on. But the problem in Asia, is, of course, is that you have some very stubborn views in the various countries, whether it be Japan, Korea, Vietnam, Philippines. They're all disputing these islands, and it can get out of control.
Mark, how long have you been investing in China or looking at China as a place for capital?
It's been over 30 years now.
How would you describe today's opportunity over the course of that generation of investing time?
Oh, it's incredible. I mean, the
best it's ever
changes.
Been?
Oh, definitely. I mean, every day you see opportunities in China. The demand for services, for products, you name it. They hunger for all of these things, and they will increase. It will not decrease because of the wages going up.